What is going on, everybody? My name is Baloo and welcome to the jungle. This is the channel where we take a very simple approach to technical analysis. We look at the price in the context of volume using the Wyckoff method. If that is something that interests you, then why don't you hit the subscribe button? I do this every single day, except for the days that I don't. So in today's video, I want to take a look at what is going on with VeChain. It's been a while since I've done a VeChain video. I got a ton of comments in the comments section asking for an update on VeChain. So here it is. We're going to take a look at VeChain. Let's not waste any more time. Let's just jump right into it. VeChain. Where is VeChain? There it is. All right, let's take a look at the trend. You got to get the macro first. So let's just get a look on the macro here. And on the macro, just ignore the pink trading range. I know we'll zoom into that in a sec. We reached a peak, okay? We reached a peak back in August of just over 2 cents for VeChain. And since then, we've been grinding down. So we had a little bit of a downtrend. We got a huge shakeout to our seller's climax. You can see the little blip in volume there kind of picking up there. It's a little harder to see on the daily. Let's go to the 8-hour chart here. It's been accumulating for a while, so I don't want to go too zoomed in, but we'll take a look. Yeah, so we had this downtrending, this down sloping line here. You can see I lined up these two peaks here and created this downward sloping line of resistance. That was where the change of behavior occurred. You can see that transition from a downtrend to an uptrend. But yeah, we have our seller's climax right here. Seller's climax right here. Automatic rally right off of that. That sets the width of the range. So we've got the width of the range here. We've been accumulating for months. When an asset is in accumulation, it is building a cause. So in Richard Wyckoff's analysis and methodology with the Wyckoff method, you know, there are a few laws. One of the laws of Wyckoff is the cause and the effect. Now, one of the most effective ways for you to determine price targets based on an accumulation range is to learn how to do point and figure. Full disclosure, I don't know how to do point and figure. It's definitely on my list of things to do, but it's kind of complicated, so I don't do point and figure charts. For those of you who don't know, point and figure charts are these X's and O's. I don't understand them yet. It's one of the original methods of price analysis was to use this point and figure chart. It's not based on time, it's based on volatility. X's are up, O's are down. But anyways, let's just go back to the analysis that I do know how to explain. So yeah, we have this trading range. You can see the accumulation. The price is trapped in this downward sloping accumulation. The volume, the price spread is decreasing throughout the range. This is throughout phase B. So here is phase A, where the width of the range is set. And then we have this declining volume up until this little bit of a spring action here. And you can see that as the price action came near the bottom of the range, we got a nice event to the upside. We got a spring. It hit and sprung up. That's what the definition of a spring is. So we got a nice move to the upside on that spring, on nice demand, and then the test on the backup is low demand. So people aren't selling. Composite man is not selling. We finally got a break through of the trading range, backed up off of our sign of strength, and then hit markup. Now, this is the first consolidation after the accumulation. So we're definitely in markup. It's taking a little bit longer. That's, you know, every consolidation gets shorter and shorter until you get to that blow off top, that big climactic action. So right now we're definitely in the slower end of things, but let's just take a look at this local consolidation here and see what we can see in that regard. So I'm going to zoom into this pink trading range right here. Now we'll go down to a lower time frame. Let's go to the 4-hour. Yeah, and this looks good here. So this orange line, I'll just delete that. So the green line, oh yeah, I forgot to mention the green line. You can see, oops, this green range here. is a very important SR flip, support slash resistance flip. This was basically the support level where the capitulation occurred. So we had this level here, it was finally holding, and then we capitulated through that, rallied up to it. You can see it's also the point of the automatic rally, got a rejection there, tried to poke through, and then we've been holding it as support. So a very important support slash resistance flip right there. Back on, okay, we're still on the 4-hour chart, so let me zoom in here. So that's what that green range is. So again, you can see the contraction of the volume, the contraction of the supply on the contraction of the spread of the price candles. This is looking really good. Buyer's climax, automatic reaction, secondary test, phase A. We're holding on top of that macro support, all with an ascending triangle formation. You can see the lows have higher lows throughout the consolidation. This is showing a lot of strength. I really like the way that VeChain looks, and we are reaching a conclusion point. We are reaching an area where we're going to see a sign of strength come in. The sign of strength, it's, you know, we've had a long accumulation, so don't expect a weak sign of strength. It should be pretty good, and then we'll get a backup onto the top of the range and continue with our markup. VeChain looks really good. You know, the fundamentals on VeChain are really strong. It's one of the few projects that I do follow a little bit on the fundamental side. I'm much more a technical analyst for sure. There's just too many projects to keep up with. You know, I'm not going to do my homework on everything. There's too many opportunities in this market for me to focus on hours and hours of reading white papers and trying to figure out if people are, you know, just crappy projects or this, that, and the other. You know, if you have $50 million worth of trading volume every day, you're definitely a player in the space, and I'm just going to analyze the chart from a technical point of view to try and see if I can gain any price momentum opportunities inside of that. VeChain looks really good. I like it. Now, obviously, nothing on this channel is financial advice. I'm not your financial advisor. I'm a cartoon bear. Don't ever get financial advice from a cartoon bear. But as far as the price, it's looking really solid. I like these ascending channels. I like everything that I'm seeing inside of here. We do have a little bit of supply. It got eaten up. This would be considered absorption. You can see this spike right here. I like it. If you were to trade this, let's see how far support is. So if you were to go and place your stop loss below macro support, you're looking at least a 20% stop loss. So for those who are in a kind of like a swing trader's mentality, you can gain a position on this. Now you have to tell yourself how much you're willing to lose, and then you need to times it by 5. So if I, for example, want to only risk $100, meaning that if my stop loss is triggered, I lose $100, at a 20% stop loss, it's $500. So my position size, if I were to enter here, would be $500. Now, you could try and get a little bit better entries. As you can see, we do have higher lows throughout. So in theory, we shouldn't get lower lows. So you could go to the local low right here, get a position down there, and now we're looking at around 15%. I would love it to come down. To, you know, a better support level, but you might just have to, you know, me personally, I might just take a risk. I might just wait, honestly. I might just wait for a backup, because on the backup, I've got a lot better opportunities. So if I get a move, a sign of strength, and then the backup will probably come down and maybe even touch this lower ascending line here. Get a position there, make it really tight with about a 5% stop loss. Now you've got a real position size. So a $100 risked position on a 5% stop loss is actually a $2,000 position. So if you're wanting to know a little bit more about position sizing, there's a video popping up at the top of the screen right now. Go ahead and take a look at that. That is what I use to calculate position sizes. This is what you need to do if you're a trader. Risk management is number one. TA is not a crystal ball. Anybody that says they know what the price is going to do is an idiot, and you shouldn't listen to them, because nobody knows what the price is going to do. Nobody. A lot of people forget that all these candles are just people buying and selling, okay? There's no rhyme or reason. We're humans. There's emotion. You know, news events occur, whatever happens. These markets are not rational, so don't ever try to rationalize a market using technical analysis. All technical analysis really allows you to do is find a position where you can get a tight stop loss. That's it. That's all you can do, because when you can have a tight stop loss, you can limit your risk. That's it. Don't think that this is a crystal ball. This doesn't tell you anything. Anyways, that is all the time I have for today. If you enjoyed the content, please leave it a like. Don't forget to subscribe. And if there are any projects you would like me to take a look at, leave them in the comments section down below. And until next time, please trade safe. It is a jungle out there. Peace.